Here is a piece of the article from Bloomberg. I think that's 2 days ago or 3 days ago, 22nd April. Better than fear. Earnings has analysts rethinking projections. 77% top estimates. Although earning contraction is like expected or happening at the moment, but still, they still beat the earning. Next one, take a look at this chart. This is Q1, this year Q1. Right now, it's reporting Q1 2023, so which is on this bar. So as you can see, this is from the Bloomberg Intelligence. Let me just read this for you. An earnings recession is typically defined as 2 consecutive quarters of corporate profits below their year earlier level. And excluding energy, which skewed estimates for the broader index last year due to higher commodity prices and elevated inflation, S&P 500 earnings have been declining year over year since the second quarter of 2022. Since last year, Q2, earning has been declining for the S&P 500. Right now, S&P 500 reporting Q1, so Q1 here. So you can see that this is the trough, the lowest point based on the projection. If you think about the stock market, it's always ahead of the economy for like 6 to 9 months. Means that we're probably looking at somewhere around here because people already look past this. It's already factored in. So according to the price action or according to this sort of a thesis, because this is like the lowest point, like Q1. If Q1's just gone, just passed and finished reporting, and we still see that the S&P 500 or the general stock market index still form a higher low or without much correction or pullback, this is a great thing because started next quarter, Q2 or even Q3, is slowly climb back up and then on the rise. So I think this should be a critical moment. So according to this piece of the Bloomberg Intelligence, so which we'll see shortly in the chart and how do we relate this piece of the information together with the long-term chart in the S&P 500. So, but right now, if you think about like, if this is really the lowest point in terms of the earning, which market might be already taking into account, already factor in or to price in, then the stock market could probably look ahead 6 to 9 months, probably somewhere around here or even here, 6 to 9 months ahead. Is a leading indicator ahead of the economy. Let's jump straight into the market outlook. For this, I would like to highlight the Bitcoin analog. I suspect that there should be a shake and reverse coming up. And for crude oil, I wonder if it could be the LPS, the last point of the support, which is still a bullish thing. And for the dollar index, currently we experience a weak rally. So we shall see whether it is a form of a supply exhaustion, which we still need to wait for a strong rally to change the character of the whole dollar index, or we could expect a breakdown. We'll see shortly. So let's dive straight into the chart. Let me pull this chart. All right. This is S&P 500 daily chart. As we can see right here, right now, what happened last week? Last Tuesday, we were here. We were on this bar. So last Tuesday, I talked about there's a potential of the breakout here, which was unfolding at the moment. I talked about there's a potential supply absorption based on the higher lows throughout and a demand tail. And also with this increasing of the supply, look at this increasing of the supply, but we still got buying some demand happening right here. And then the low keep lift up. And on Tuesday, there's a attempt to break out. So this is the breakout, but not successful. So in fact, there is not much aggressive volume behind the breakout. So you can see that the volume is on the low side. Unlike this sort of the supply bar or this sort of the supply bar, which actually have a effect right here, have a results. It's a bearish results, but no follow through. This one got high supply, high volume, at least increase of the volume, but not much results. That's why there's a attempt to break out on Tuesday. However, it failed, not successful because of lacking of the aggressive demand. So demand is still on the low side, so which is not a good thing. But on the other hand, we can also see that there is no follow through of the supply either. The supply and demand is like on balance at the moment. That's why we do not really see commitment to the upside or to the downside. And short term, this is the trading range that is still consolidate and going up and down. There's a attempt to break out on this few bar, one bar, second bar. Well, I would say this is not really, but you can definitely see that unlike the previous uptrust or previous rejection on here, there is a sharp pullback or even this sort of the sharp pullback, and supply is on the high side. But here, we do not have a high volume, high supply or high demand. That's why it's still a waiting game. So I suspect that it might take some surprise of the earning to push a price up. So which is still currently unfolding. We need to wait and see whether we got some form of a surprise. So as long as the market interpret that it beats the expectation or is a lot stronger than what they expect, then it could stir up a rally and initiate a breakout to the upside. Last Tuesday, after the failed breakout here, we got on Wednesday this bar attempt to push a price down, but also demand tail. On Thursday, here is slight increase of the volume. Supply come in. Results also show up slightly. Right on this bar is still go back and tested this bullish bar, but not much results. At least I don't see commitment below this boundary, this support level. This are the obvious support level that you need to at least to attempt to break down if there is a bearish movement down. And on this bar, there's still demand. But one thing for sure, if you take a closer look right here, look at the spread here, the low. The low on this bar is like 4133. The high is like 4164. It's around 30 points. This is really like a narrow range. So compared to like the previous range, the volatility here is a lot lower. So on this environment, it's not really great for day trading, which I'm going to show you why in a losing trade during the trade review section. And also, for swing trading, is a lot better that we pick the strong stocks and some of them really got the momentum behind. But ultimately, because of the market breadth, I still see that it's not an easy money environment. That's why we still see breakout tend to fail from time to time, and some forms of failure of the breakout, and it keep consolidating. It doesn't go reversal immediately and then have a straight down move. So it's just like fail to break out and commit above. It takes more time to consolidate, have some shakeout, take out the low, take out the high, and then consolidate. That happened for a lot of the stocks. So which stir up quite a lot of the whipsaw. If you have a stop in place, then you get stopped out and you need to find another opportunity to get in. When the market environment is getting better, you will definitely feel that, see that in your trade. So at the moment, you can see that we still haven't go down to test this obvious support level 4100. This is still the trading range like 4160 or 70. There are quite a number of the bars attempt to break out but fail to commit above. But when there is a pullback or when there's a failure happen followed by a reversal or followed by a bearish bar, it doesn't attract a lot of the supply. In fact, is I would say probably still less than this bar or at most on par with these three bars. Not a lot of the supply either. And in terms of the results, so far, all this bar are pullback. 1, 2, 3, 4 pullbacks. It's still within this body of the up bar. Not a bad thing. In fact, not bearish at all. I would say short term is still consolidating here. that we might need to wait for some kind of a catalyst in order to move out. And if you want to take a closer view, then this is another trading range right here. So this is another trading range within this slightly bigger trading range, which if you take a zoom out view, the whole chunk right here, when we compare, this is the rally, there's the uptrend, short-term uptrend, there's the consolidation, forming a flag type of the formation, which is still bullish. And if we take another view, like this is a slightly longer term view, which I would like to emphasize that to somewhat like take into account the Bloomberg article that we look at. If Q1 this year really is like the trough in terms of the earning, then probably the worst will be here in terms of the earnings. After Q1, is probably going to get better and better. So in terms of the earning, but if the markets already look ahead 6 to 9 months, then October will be the low. Now is April. This is October. And if we plus like 6 months is on April, it's probably looking around ahead of 6 to 9 months. So I think that could probably make some sense. In terms of the price, then the worst probably is behind us already. But if we purely look at the price action, this is, let me zoom out a little bit. This is really like the downtrend. I don't really see the capitulation movement, so which is too bad. I still hope to see the capitulation like we had in 2008, but it is what it is. Selling climax, automatic rally, secondary test, and then we slowly move up. And when we see the volatility, this chunk right here is volatile, super volatile. If this is phase A, like selling climax, automatic rally, phase A is volatile, that's expected. Phase B is also expected to be volatile, but probably less volatile than phase A. But right now, in this portion, look at this portion. This portion has a lot of the contraction in terms of the volatility and in terms of the volume as well. Look at all this volume, very high volume, very high volume. And the volume is somewhat high here, but take a look here. This portion right here is the best in terms of the volume. So we get very low volume, very low supply. And in terms of the volatility, look at the price spread. So look at this. Unlike this choppy movement, we have very smooth, very low volatility reaction. This is a bullish sign. If this is an accumulation, then likely this could be the last point of the support, like the LPS, pending a breakout to initiate the sign of strength rally, and then backing up, and then to go up to test 4,600 or even higher. That's the slightly longer term view for the S&P 500. So if we look at the rest of the index, still, NASDAQ is testing at the support. Even if it breaks the support at this moment, like for example, if we do get some kind of the worse than expected earning for Meta, for Amazon, for the rest of the big tech, the axis line is only a line, right? We don't really want to trade it like a line. We still have this piece or even up to here. These are all the support area. And based on the pullback, I suspect that it could violate this level. Because if we look at like this bar, so there is an increasing of the supply right here. There is also increasing of the supply, although it's just slight increase. But ultimately, we can see that this is like the supply zone. It failed to overcome this. And the demand is not that aggressive and not that of quality, high quality in terms of demand. That's why we do not really see a quick bounce off the access level. So I suspect it could have the ABC correction ABC pullback with a lower low. And then eventually it could bounce back up and then go up. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.